Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
There are some trade tensions. However, the weekend worries have been taken out as we speak. The Asian markets mixed to mildly in the green.
These are the best chances to buy with the global corrections, but they are sharp and they are tradable. We are looking at a tradable correction.
The fact that the rupee is still expensive means that there's room for it to weaken further in the near term.
0.3 on the big indices and 0.6 on the Nifty Bank and 0.25% on the mid caps. Red all over everywhere.
The overall stock market, I would say, is somewhere between 15 to 20% overvalued. Within that, financials is the biggest pocket of overvaluations.
The reality is our flows aren't looking great. And we have a problem of our basic balance. Our current account deficit has been expanding over the last couple of years.
5923 crore number in the month of August. Even compared to the month of July, that is down 44%. I mean, so it is a steep fall.
It's coming as a double whammy. US growth plus trade tariffs and slower growth for EMs.
There is a worry on the rupee, the way it has slided during the last couple of sessions. Both the RBI and the government are very vigilant on this issue.
The Nifty is still down about 123 odd points or so. We are off the lows, but just a little bit.
Okay, well, it's been a rather rough day for the bulls, and as things stand, the market's staring down the barrel once again and looking at the low point of the day. This is Closing Bell. I'm Anuj with Ms. Surabhi. Hi Surabhi, good afternoon.
Good afternoon, Anuj. I remember on Friday we were discussing that, there's a tale of two halves, and let's see if there's going to be that rebound that we saw, that's going to continue. But I guess Monday has been pretty damaging for sentiment, right? It started with currency. Currency is pulled back, but on the equity side, no respite as yet.
No respite, and I tell you something, today is a classical definition of trend day. And, we were discussing, you had a, first move which was sold into. Each hour the market made a new low. 1 to 130 pullback, the spike that you're seeing right now. And today you have macro triggers, Surabhi. Brent crude is almost $1.5 higher than what it was on Friday. Rupee, you can sense this is a sharp intervention, but it doesn't look like, it's going to sustain. And obviously from the lows, there's been a bit of a recovery, but that can get sold into. And, this is a market where positions are on the net buy side by a big number. And that number needs to come down. So obviously, my sense, limited sense, looking at the data right now is last hour could get fairly ferocious for the market. The way Hang Seng closed today, about 400, 450 point lower. I think this is a bit of an emerging market problem. The emerging market index, it's MSCI EM, MSCI Asia X Japan. You look at things, it's looking quite bad. As we discussed in the morning, this perhaps would turn out to be the good buying opportunity for investors, but it's a tradable correction. It's a move which started at somewhere around 11,700 on the Nifty and perhaps has logical target somewhere around 11,200 thereabout on the index. That looks possible. And today, the way that pullback has been sold into, last hour could be quite interesting.
Also, Anuj, just a word on the mid caps, because that's where it's quite clear, right? I mean, whether you're looking at the mid cap index, Nifty Junior, even big stocks, stocks like Havells, etc. There's a lot of selling going on in that side of the market. That tells you that perhaps there's more on the way down.
Yeah, advanced decline started well in favor of advances. Now it's 1:2, and the mid cap index is down 330 points now, and the junior also. So there's and obviously you don't talk about micro caps right now, because that's where the big problem is really going to be. But you have to respect the screen, Surabhi. This is not to create any fear factor or anything like that. The screen is telling you that there's something wrong with the market in the near term. After the big rally in August, the market wants to correct in September.
Okay, that's the shape of things as they stand right now. So let's straight away get the strategies for the last hour in place. We've got Ashwini as well as Mitesh joining in. Ashwini, so the Nifty has already given the bears about 150 from the start of the day. In the last half an hour, can you still short this thing?
Well, my view is a little different, which is that if you see, previous 4 days low, that on the Bank Nifty futures was about 27,330, 350. We're still hanging on to that zone. Also on Nifty, again, Nifty futures, important support around 11,450 thereabouts. So let me suggest a long and see what happens. Your stops are close by maybe 50 points on Bank Nifty, and On the Nifty, you can say about 25-30 points. My sense is last hour you could see some covering because you've seen Bank Nifty premium go back to about 100 points. Often that means that as the market is coming lower, maybe people are covering some shorts. So this is, last 1 hour type call, all day selling, etc., and into support. So maybe all you need is a bit of spark, and the market can easily go up 100 odd points on Bank Nifty, 30-40 on Nifty. So that way, last hour is probably more a long call for me. Individual stocks, Axis Bank has held on to its gains all day. So that's a buy with a stop of 653, target of 670. ICICI Bank, that is a buy with a stop of 328, target of 344. And NIT Tech is a buy with a stop of 1385, target of 1440.
Okay, some buy calls from Ashwini. Just take a look at Bajaj Finance. That's now down about 4%. So obviously there's some selling pressure over there. Mitesh, good afternoon. Your thoughts on the day so far and your trading calls?
Yeah, good afternoon, Anuj. It's been a strong negative day very clearly, and now we are getting close to 11,400, which is where some of the important moving averages are placed. So maybe another 40-50 point kind of decline can happen. If not today, maybe tomorrow early morning. But if 11,400 holds, then there's a chance that we might actually recover and chop this range of around 11,600 to 400 for the next few days to come by. So in that sense, we'll be watching that level closely. Similarly, I think talking of the Bank Nifty, 27,100 to about 27,050 is a good support, and we've had a low of around 27,140. So again, very close to support levels. Having said that, that's why I'm trying to attempt a couple of buy calls. Axis Bank features on my list as well. 642 should be a stop, 675 should be a target, and Power Finance Corporation is another one. That's a buy with a stop below 86.6 and look for targets of 94.
Okay, so some longs being tried for last hour of trade. SP Tulsian of sptulsian.com is with us. Mr. Tulsian, good afternoon. Thoughts first on Bajaj Finance and the kind of correction that we are seeing. It's a large stock, and from the highs, it's been, I think, a 12% correction, if I'm not wrong. This month itself down 8%. Yeah, 12% correction from the highs. Of course, at 3,000, you had expressed concerns about the valuation, but at 26.30, how much more you reckon before fresh buying emerges?
See, Anuj, I think it has shown a correction of about 15%, and it has touched or it moved closer to about 3,000 rupees. In fact, if I'm not mistaken, last week, about exactly a week back, I've said when it was ruling at 2960, 2970, that there is no reason for the stocks or that to an NBFC. See, why you give the higher P multiple of 50 times, for any stock, that either we expect the growth to come in from that company of maybe about 50%, or the sector has some extra P multiple factor like FMCG or MNC, which always have a maybe 10%, 20%, 30%, 40% over the normal P given to that sector, or you have some kind of entry barrier for that particular company or for particular product. Now, if you take a call on the Bajaj Finance, yes, they are showing a growth of about, or they are going to show the growth of about 30-35%. So there is no reason for the P multiple of 50 to be given for that. And in fact, at that time, I have cautioned that I am not at all convinced when you have 30 NBFCs, housing finance companies, all available at a P multiple of maybe anywhere between 15 to 22. Or maybe 15 to 20. So probably this is seen to be the victim, and it is a classic case of frenzy and overvaluation, not in this one stock alone, maybe in many of the consumption-led stock also. If we all know that for the last about couple of weeks back, markets and experts were only talking of the consumption stock as if there is no consumption, there will be no stock available except for that. So yes, the victim of this overvaluation will be seen reflected. Probably I feel that maybe because if I'm expecting an EPS of about 60 rupees for Bajaj Finance, and even if I give a higher multiple of about 40, logically it should see at a valuation of maybe about 2,400 to 2,500, anywhere between that. So I won't be surprised to see a correction of about 100 to 125 rupees taking place. And this is not only applicable for Bajaj Finance, as I've said, that this applies to many of the stocks. But let me tell you that the kind of corrections which we have been seeing, and this I have been maintaining, I may be wrong, that the advanced tech selling kind of things and all sort of things. I'm not saying that that's the only factor. In fact, weak rupee, the high rising crude prices and the overvaluation are all seem to be victim, and market should bottom out latest in this week, maybe by because Thursday market is closed. So maybe this weakness may last up to Wednesday. We may see the weekly option expiry on the bank Nifty to be happening at a subdued note for this week, and then from next week, I won't be surprised to see the buying coming back with vengeance, coupled with the short covering as well in all these stocks. So maybe difficult to take a valuation call, but still Bajaj Finance, I'll give a valuation call of anywhere between 2400 to 2500.
Okay, that is a call on Bajaj Finance. Lots of stocks on the Nifty itself under pressure. Z Entertainment continues to find new lows day after day. That stock's now down to 465. M&M is seeing quite a bit of unwinding at the moment. Days low on Mahindra & Mahindra as well, down 3.5% over there. Deepak Shenoy of Capital Mine is also with us this afternoon. So, Deepak, good talking to you. I'm going to take off from what Mr. Tulsian was just saying about consumption. Even today, I mean, after the drubbing that it got last week, today as well, the Nifty Consumption Index or the FMCG Index, if you're looking at it, it's one of the worst performing indices. Dabur, Godrej, Lever itself, all these stocks are down between 2 and 4%. Is this time to cherry pick, or is this time to sort of stay away and just wait for the dust to settle for some of these stocks which are so richly valued?
Surabhi, I would say even sometimes, even before when they started moving up quite a bit, they were already quite richly valued, and now at 70, 80 times, past 12 quarter or past 4 quarter earnings, I think, it's a little difficult to justify this kind of valuation for a longer term. Also remember now, we've got a good GST quarter, because, you saw the June quarter, which was compared to June 2017, was good for a lot of FMCG companies. That's because of the GST impact last year, lower base. This September, we will see the offset. So September sales were very good in 2017. So growth is going to be moderate. So I would say, don't hurry to buy these stocks. Good stocks exist, but, you want to get in, maybe plan to get in over the next 4 quarters rather than all at once. This is not really a big cut from where it was even 6 weeks back. So I wouldn't hurry to buy them right now.
Okay, no hurry to buy them right now. By the way, just keep an eye on the currency, because that, there was this recovery, and now that's beginning to get sold into once again. So being that kind of a day, at least on the dollar rupee, every time you make any recovery, that gets sold into. So we would want to watch out for that. Of course, there are other stocks as well where we're seeing some moves. Mr. Tulsian, thoughts on Sun Pharma now after this decline, 3.5% lower? Of course, Halol is already under a bit of a pressure now because of that fresh inspection and some observation. And this morning we come to know that even Mohali, perhaps a fresh inspection may have started. Is this 3.5% downtick a buying opportunity, or considering the stock has had a run ever since last quarter's numbers, it could see some more pressure?
See, in the morning again I've said that this stock can, because actually on the last Friday I've said that it can correct to maybe level of about 5-6% after having run by about 130-140 rupees post its Q1 numbers. So now again the stocks seem to be bottoming out. In the morning I've said that 630 looks a good level where it should settle. So now I think it is ruling at 640 or so. So this is a good entry point. Maybe the things are you cannot catch the bottom. It is difficult to that because these are just the estimates. But maybe a further downside of about maybe 8 to 10 rupees is seen on the stock, where the entry can again be made. Because I don't think that on a valuation parameter beyond 630 the stock can really correct. Okay, we'll take a break on that note with a bit of news on Brent. It's once again making a move towards 78. We could just pull out. Do we have intraday on Brent crude? I think that would be very interesting. Just pull that out, that data on Brent crude. That's also putting quite a bit of pressure on market today. In fact, 430 points lower is what you have on the Sensex. That's almost a 1.5% move that you're seeing on Brent. 77.83 is what we have. On Friday, Surabhi, when we were trading, we were at 76. So from 76 to 78, it's been a rather swift move of almost about $2.
coupled with the kind of move that we have seen.
What's happening with the currency market as well? There was, of course, what looked like pretty strong intervention, because after falling like a knife, literally, the rupee, going well past the 72.50 mark, in fact 72.60 thereabouts, then there was quite a bit of a pullback. The question is, have we seen the worst, or is there more to go, and what does that mean for the Indian equity market? Paul M. Kitney joins in. He is from Daiwa Capital Markets. Paul, thank you so much for taking this call. A lot of concern here in India over the currency. How do you view the situation and what that means for our equity market?
Right. Good morning, and thanks for having me. I think really what we're in here is in a trade friction accelerating period leading up to the U.S. midterm elections, which is pro-dollar. And what we're seeing is that the crosses that are depreciating the most against the US dollar in this particular phase are in emerging markets, particularly those which have twin deficits. So India falls into that particular category. It's not as extreme as we've seen sort of elsewhere in the world, whether it be in Turkey, Brazil, Argentina, etc. But nevertheless, I think this is what is sort of largely behind the movement in the rupee. Now, so over the long term, a trade war is a negative sum game. Everybody loses. But over the short term, for a deficit country, a trade war is actually positive for the deficit currency, the currency concerned, i.e., sort of the US dollar in this relationship with the Chinese yuan. So until we get to the point where there is a trade deal done, we should expect emerging market currencies to be weak. Now, the implications for Indian equities, I don't think this is a negative. It's positive for the export sector, I think particularly IT. I think people's concerns regarding the impact on interest rates are probably tempered by the fact that the reverse repo is trading at a positive real yield at the moment. So there's not a situation such as elsewhere in the Asia-Pacific region, such as the Philippines, where you've got negative real policy rates, and the central bank needs to aggressively raise rates. Now, I think we'll see a gradual rate hike cycle in India, but not enough to kill the equity market.
Okay. For India, Paul, how much more do you think? I'm talking from the point of view of foreign investor, which has seen 70 come and go, 71 come and go, and now 72. How much more can be digested? And again, this recent correction from all-time highs that we're seeing in India, do you expect this to continue or to expand? Or do you think this is just a passing phase?
I think it's a passing phase. So, I think we need to look at the currency situation in India in global context. So, we're seeing a very similar thing, whether it be elsewhere in EM, whether it be in the Indonesian rupiah. We've seen it. We've seen a pullback in the RMB. In the RMB. I think that we'll continue to see weakness in EM currencies in particular against the backdrop of a strong US dollar. The positive driver for India are twofold. Two particular drivers in the context of Asian equities. One is that we still have very robust earnings growth, both in nominal and also real terms. And the second thing is, and this really goes in India's favor during this trade friction period, is that there is a defensive quality, which is that the growth model in India is not correlated with the global trade cycle. It's not as exposed to a trade war. Now, that relative performance could reverse once a trade deal is done. But in the interim period, I think that in the context of global emerging market investors will favor Indian equities.
All right, Paul, thanks a lot for your time today. That's the view from Daiwa. Now let's focus on the story that's flashing on the screen. A bit ahead of the curve is what we have on Arvind. Remember that three-way demerger which Arvind is planning? That's now almost a done deal, and we're getting towards the end of that. And once the final approval is out, and that's from the NCLT, of course, we'll have the record date as well. Nimesh, of course, has been tracking it very closely. So, Nimesh, tell us, what all have you picked up?
So, Anuj, that's what I've picked up, that the NCLT hearing, which was scheduled today, has already happened. and now the only order is reserved. So maybe in a day or two, you will hear from the NCLT court that the demerger is already approved. What I understand from sources, it was a done deal for sure. The company was just waiting for an official communication from the NCLT. So now the hearing is done, so which means unlikely there will be further delay in terms of demerger. As far as the demerger process is concerned, if you remember, the company had proposed a three-way demerger. So Arvind Limited, Arvind Fashions, and Anup Engineering. There will be three different companies post the demerger comes into effective. So if you look at the announcement which was done earlier, if you're owning one share of Arvind, if you're holding 5 shares of Arvind, you'll get 1 share of Arvind Fashion, and if you're owning 27 shares of Arvind, then you'll get 1 share of Anup Engineering. So that is the broad framework which has already been announced. Now what I believe that today the hearing has already happened in NCLT and only the order is reserved for a future date. So maybe in a day or two you will hear probably from the NCLT that the final approval has come through. If you look at the current market cap of Arvind Limited, it's close to 10,500 crores. I was looking at all the research analysts and reports, including CLSA Note, and they believe that given the split, the EV of this company could be close to 15,000 crores. If you add debt to it, the market cap could be close to 12,200 crores. So maybe analysts are expecting that post the demerger, there could be some bit of value for the shareholders of both Arvind and for other companies like Arvind Fashion and for Anup Engineering. But today's news is essentially that in the NCLT hearing, the hearing is already done and only the order is reserved, which is, I'm told, is expected to come very soon.
Okay, Nimesh, thanks a lot for that. So we'll keep tracking it. Of course, the stock is spiking as we speak, almost 400 on that stock. Mr. Tulsian, your thoughts on Arvind? Now, Nimesh's sources are telling him that it's almost a done deal. Order is reserved from NCLT. At current level, what's the call on the stock?
Anuj, I hope that this seen as a done deal, because sometimes when the order is reserved, you may have some kind of probability of not this one, but I don't hope so, because sometimes if the order need to be spelled out, the order is kept in reserve, but generally for the merger it is seen to be approved immediately. But anyway, presuming that the deal will go through, which in all probability seem to have having 95% probability, if you take the call now, I think going forward, unless until we really wait for the stock to get this demerge and all sort of things, the EV of the company is seen closer to about maybe 12,000 crore. If I include the debt also of about 1,500 crore and market cap of 10,200 crore. So I think that for the time being, once this NCLT approval will come in, you should see the share moving to a level of about 430, 435. In fact, we have been seeing share trading in the range of about 390, 380, 385, 390 to 430, 435. Because what is happening in case of the mergers also, we have seen this merger coming in for Schaeffler on Friday, and in fact that is seen to be extremely positive, a bearing company. But that is not seen having reflected into the share price. Probably the bad sentiment seen prevailing today. So if this order will come, say maybe in this on a bearish day, probably you may not see much upside. But under the normal circumstances, you should take the share price moving to about 430, 435.
Big spike on the stock right now, as we're speaking.
No, I think for good reason, as Mr. Tulsian also is pointing out. It's it's been stuck in a range, Surabhi, for some time now, of course, and the market's been awaiting clarity on whether when it will materialize. And obviously, you remember when the demerger was first approved. After that, you had seen that big rally in the stock. I think upward of 500. Yeah. Of course, that was a different mid-cap market. Let's put it on table that was a different mid-cap market. But even then, I think. Obviously, if the approval does come in and you have a record date perhaps by September or October, I think that could be interesting. But, that's, of course, information that Nimesh has got. And, you have to trust your sources.
Oh, absolutely. Interesting companies waiting for these approvals and go about restructuring their business. Arvind is one of them. CESE, we keep seeing that trade still to get complete clarity on that four-way demerger. But anyway, Deepak, I want to talk to you about a clutch of stocks that are under the weather today. I'm talking about IIFL Holdings and Cholamandalam in particular, actually NBFCs in general. Now, these two specifically because of the CS report highlighting perhaps stress on margins because of their borrowing of, short-term money. So how do you, I don't know if you concur with that view or not, and how would you look at some of these stocks and NBFCs in general, given the fact that, the benchmark yield is now well above 8%?
Yes, I think there have been two interesting things in the debt market. I mean, interesting maybe not as a positive, but one was the situation with ILFS, which resulted in few debt mutual funds having to see a bit of a loss because it was downgraded from AA plus to BB, and BB is below investment grade. So that has resulted in a lot of a consternation in perhaps the commercial paper market and also in the short-term debt markets. So we're going to see yields rise even higher than what's happening in the government securities market. Secondly, these spreads on some of the bonds issued, they have widened quite substantially in the last 1.5 months. So yes, in the near term, margins are going to get compressed. I don't know about the specific report that you mentioned, but I think all NBFCs are going to see a bit of a cut. But if you look at the NBFCs per se, I think the housing NBFCs will be impacted more because their lending yields are substantially lower versus some of the others. So Shriram Transport, which lends at 19%, perhaps has a slightly larger spread to work with than a home finance company. So it will impact all of them in varying degrees, and we'll have to see now how many of them are able to pass it on. Near term negative, but long term I still think NBFCs are going to be quite required because the public sector banks aren't lending.
Okay, Mr. Tilson, before we thank you, just wanted your thoughts on Tata Motors. It's a stock which has divided the street like no other stock, of course. But at current level, that every time it's going there at 255, 260, it's seeing some buying, regardless of the JLR numbers. Your thoughts on the stock?
See, Anuj, I think it's a tired stock, and in fact, what I find in the stock is that you get to see the sales numbers of the company, in the first 10 days. 3 or 4 times, maybe of a different geography, with the final number seen coming in on the 12th and 13th, which we have seen today coming in. In fact, those numbers are not seen disappointing. 14% growth on a YOY basis, over 1 lakh vehicle plus. But in fact, on the JLR front also, now the confidence which we used to have about 6 months back or 1 year back is seen to be missing now. On the domestic front, yes, the things are seen little on an improvement, maybe on the CV space, but on a comparative value, I think the more buying interest goes for Ashok Leyland and Eicher Motor, which have a CV segments also. The growth seem to be better by both these companies. So taking all this into account, if you don't have the comfort, and when the valuations of the other automobile stocks have corrected, as I've been said last week also in respect to Bajaj Auto ruling at a P multiple of 16, 15, 16 net of cash, or maybe Hero Moto at a P multiple of 15, 16. So, you have much comfort seen prevailing in these stocks rather than Tata Motors.